Today's cryptocurrency market is experiencing significant upheaval, led by a sharp decline in Bitcoin's value, impacting the entire sector. We'll also explore regulatory developments from Canada and the EU, as well as the implications of recent enforcement actions. Here are today's top 10 stories you need to know. Recent reports indicate a surge in regulatory momentum surrounding digital assets in both the United States and abroad. Policymakers are increasingly focused on creating frameworks for stablecoins and digital assets. In the US, efforts are underway to establish comprehensive stablecoin regulations, while the UK is consulting on digital asset frameworks. The European Union is also advancing its Euro stablecoin initiatives. This regulatory focus suggests that governments are not only looking to enforce rules, but are also aiming to shape the future of the cryptocurrency landscape. As these regulations develop, they could significantly impact market structure and investor confidence. The clarity provided by these regulations may lead to more institutional participation in the crypto space. However, the effectiveness and speed of implementation will be crucial in determining their overall impact. Ethereum remains in the spotlight as Vitalik Buterin unveils a new roadmap known as Lean Ethereum. This initiative emphasizes enhancing the blockchain's quantum resistance, scalability, and privacy features, crucial for maintaining its competitive edge. Given the rapid evolution of technology and increasing threats from quantum computing, this focus is timely and necessary. As Ethereum continues to evolve, its long-term development story is becoming increasingly relevant in a market characterized by volatility. These advancements could make Ethereum a more resilient option for investors, potentially stabilizing its value. The roadmap aims to address growing concerns regarding security and efficiency, which may attract developers and institutional investors alike. By prioritizing these technical improvements, Ethereum is solidifying its position as a leading blockchain platform. Looking ahead, successful implementation of this roadmap could further enhance Ethereum's appeal and foster greater adoption in diverse sectors. Recent data reveals significant shifts in investor positioning within the cryptocurrency market. Notably, large outflows from Binance, one of the largest exchanges, have been observed, while inflows favor Ethereum and Solana over Bitcoin in exchange-traded funds. This trend indicates that capital is rotating among digital assets rather than exiting the crypto space entirely. The context behind this movement includes growing concerns over regulatory scrutiny and market volatility, prompting investors to reassess their strategies. The shift towards Ethereum and Solana suggests a rising confidence in these platforms' innovative capabilities and potential for future growth. As a result, investors may be seeking more stable options amid the current turbulence. Understanding these evolving trends can provide critical insights into the investment landscape. Looking ahead, the continued focus on Ethereum and Solana may signal a transformative phase in the cryptocurrency market, potentially shaping investment strategies for months to come. JP Morgan has raised significant concerns regarding corporate treasury strategies involving Bitcoin, particularly those that mimic strategy-style selling policies. These criticisms highlight a growing apprehension that such strategies could amplify market fragility, especially in times of economic uncertainty. Corporations are increasingly attempting to integrate cryptocurrency into their financial frameworks. But the complexities and risks associated with this integration are becoming more evident. As scrutiny from major financial institutions intensifies, companies may feel compelled to reevaluate their exposure to Bitcoin and other volatile digital assets. This development has the potential to reshape corporate treasury management practices, particularly if market volatility continues. Investors and stakeholders will be closely monitoring how companies adapt to these pressures and whether they will pivot towards more stable investment alternatives. The ability to balance innovation with risk management will be crucial for corporations as they navigate this evolving landscape. In the coming months, we may witness a shift towards more conservative investment strategies as firms reassess their financial priorities. The cryptocurrency market is currently facing a significant decline in altcoins, with major assets such as Polkadot, Filecoin, and Bitcoin Cash suffering notable losses. This widespread technical damage reflects a weakened market structure that extends beyond Bitcoin's recent struggles. Historically, altcoins have often mirrored Bitcoin's performance, but the current downturn indicates a shift in investor sentiment, leading many to adopt a more defensive posture. As altcoins experience near double-digit losses, traders are reevaluating their positions and risk appetite, triggering a ripple effect throughout the broader crypto ecosystem. This downturn is not an isolated incident. It represents a broader trend marked by increased volatility and uncertainty. Analysts are closely monitoring these dynamics as they are critical for understanding potential recovery paths. The overall sentiment suggests that investors may remain cautious in the short term, but opportunities could arise for those willing to navigate this tumultuous landscape. The coming weeks will be pivotal in determining whether a rebound is possible for altcoins. Canada is making significant strides towards establishing a regulatory framework for stablecoins, a move that reflects the growing importance of these digital assets in the financial ecosystem. Stablecoins, which are designed to maintain a stable value by being pegged to traditional currencies, are increasingly used for transactions and liquidity in the crypto market. The Canadian government's proactive approach aims to address the rapid evolution of digital assets, which have garnered both interest and scrutiny from regulators worldwide. Scotiabank has indicated that while the immediate impact on the market may be limited, the long-term implications could reshape the landscape of digital finance in Canada. By creating a structured environment for stablecoins, the government seeks to enhance consumer protection, mitigate risks, and foster innovation within the sector. This regulatory framework may not only benefit Canadian consumers, but also position Canada as a leader in digital asset regulation. As the government moves forward, stakeholders will be keenly observing how these regulations unfold, as they could serve as a model for other countries navigating similar challenges in the digital currency space. Europol has recently taken decisive action by seizing a major Bitcoin mixing service known as CryptoMixer. This operation underscores the ongoing enforcement focus on combating crypto laundering and illicit activities within the digital asset space. Bitcoin mixing services, which obfuscate the origins of transactions, have been under increasing scrutiny due to their potential misuse in money laundering and financing criminal enterprises. The seizure reflects a broader crackdown on platforms that facilitate the anonymization of transactions, as authorities aim to enhance transparency in the digital economy. This move not only highlights the vigilance of law enforcement agencies, but also sets a precedent for future regulatory actions across Europe. As scrutiny around crypto-related activities intensifies, users and service providers may need to adapt to a more regulated environment, potentially impacting the way cryptocurrencies are traded and utilized. The implications for privacy in cryptocurrency transactions are significant, raising important questions about the balance between security and anonymity. Looking ahead, it is likely that further regulatory measures will be introduced, shaping the future landscape of digital asset transactions. Recent comments from the Bank of Japan have introduced significant pressure on cryptocurrency markets, contributing to a broader sell-off. The central bank's hawkish tone has ignited fears of macroeconomic tightening, leading to heightened uncertainty among investors. This shift is particularly noteworthy as it underscores the sensitive nature of digital assets to global liquidity conditions. Historically, central banks have played a crucial role in shaping market dynamics, and the Bank of Japan's stance signals a potential shift in monetary policy that could reverberate across various asset classes. Bitcoin, the leading cryptocurrency, experienced a sharp decline, reflecting the market's anxiety over these macroeconomic signals. The tightening of monetary policy can have far-reaching implications for risk assets, including cryptocurrencies, which are often viewed as speculative investments. As traders analyze the potential fallout from the bank's comments, they may brace for ongoing volatility. Investors must remain vigilant, as changes in macroeconomic policy can significantly influence their strategies and asset allocations. Looking ahead, market participants should prepare for further fluctuations as the evolving monetary landscape continues to affect investor sentiment and market stability. The recent sell-off in the cryptocurrency market has extended its detrimental effects to digital asset treasury stocks, leading to significant declines for companies like Strategy, Bitmine, SharpLink, Solana Company, and Upexi. This downturn comes as investors reassess their exposure to crypto-linked equities, driven by heightened volatility and uncertainty in the digital currency space. The broader de-risking event indicates a notable shift in market sentiment, where investors are increasingly motivated to minimize potential losses. The decline in these stocks underscores the challenges faced by the cryptocurrency market, revealing the interconnected nature of digital assets and related equities. Companies heavily invested in cryptocurrencies may encounter mounting pressure from shareholders, which could lead to strategic reevaluations. Furthermore, as regulatory scrutiny intensifies and market dynamics evolve, these firms must navigate a complex landscape. The ongoing sell-off raises questions about the sustainability of their business models and their ability to adapt to shifting investor priorities. Moving forward, companies that can effectively pivot and embrace innovation may find opportunities to regain investor confidence. However, those that fail to address the changing environment could face significant challenges, potentially leading to further declines in stock prices and investor interest. Future strategies will be critical for survival and growth in this volatile market. In recent developments, Bitcoin has seen a significant decline, dropping to around $84,000, which has triggered a broader sell-off across the cryptocurrency market. This downturn is particularly alarming, as Bitcoin has long been viewed as the bellwether for the entire digital asset space. The CoinDesk 20, a benchmark for major crypto assets, has also fallen nearly 6 to 7%, reflecting widespread investor anxiety. This widespread de-risking highlights a growing concern among investors regarding the sustainability of digital assets, especially following recent regulatory scrutiny in various countries. As Bitcoin leads the charge downward, altcoins and crypto-related equities are experiencing corresponding downturns, compounding the losses felt by many. The combination of negative market sentiment and macroeconomic factors, including rising interest rates and inflation fears, has culminated in a deleveraging event rather than a mere isolated Bitcoin correction. Investors are increasingly cautious, evident in the sharp declines across multiple sectors. The implications of this sell-off could be far-reaching, affecting not just prices, but also the overall perception of cryptocurrencies as a viable investment. Moving forward, traders and investors will be closely monitoring Bitcoin's recovery efforts and the potential for stabilization in the market, particularly as institutional interest and retail participation continue to evolve amidst ongoing economic uncertainty. Thank you for joining us for today's Top 10 Cryptocurrency Stories. Which story surprised you the most? Don't forget to like and subscribe for more in-depth news updates.